All right, good morning, everybody. Let me do a quick audio check. All right, good morning, everybody. There we go. Let me do a quick audio. All right, now just give me a couple seconds. I want to send the link to some socials. All right, so far, kind of looks like an iffy morning based on pre-market. I don't really have a firm bias. We are trading at all-time highs, so it is kind of a situation where if I do see something e like equal lows, like right here, we don't always necessarily need them to get hit. We do have a nice set of equal highs up in the new day opening gap right here, but the fact that it's above consequent encroachment makes it a little bit harder to be seen unless we're just gonna really rip higher. But we have a shorter term set of equal highs right here, equal lows right here, and we're just trading in the middle of all of that. I'm just looking at how we use this BISI right here because we used it to go higher up and reach the new day opening gap low, failed to reach consequent encroachment, began breaking down pre-market but leaving some equal highs here. This is going to be an important SIBI right here. And then we've had these long and really aggressive wicks pre-market, which is something that makes me a little bit uh, what's the word? Kind of cautious. 11025. So I want to mark out my opening range gap quadrants here. And there's your open. Just make that only visible on the 1 minute chart because I want to keep my higher time frame charts clean. See if we can make a run for these equal lows. But we opened up in a discount gap right here. We got a bunch of sell side below here as well, but we already have our pre-market equal lows kind of in that same vicinity right there, so I don't really feel the need to mark those out. Left equal highs right here. I'm going to take this off just so it's not distracting. And yeah, I told my Discord I didn't really have a firm bias going into the morning session just because of the reasons I mentioned earlier. And I wanted to see what the opening range is going to do. I'm probably only going to stream for like a half hour to 45 minutes just because uh, we really haven't been seeing much during the opening the last like few days. And so I typically like to trade with music on, and obviously I can't whenever I'm streaming on YouTube. So sitting here in silence is really, really boring. And I can only do it for so long. So, but I do want to stream, so I'm gonna stream as long as I can. So yeah, around like a half hour to 45 minutes probably. Let's see, we have opening range gap that's near 100 handles, so it's pretty good. Thing about these equal lows is they are on the way, they're a very low hanging fruit target to that new week opening gap. So if you look in the bottom right hand corner, that's this gap right here, which is always going to be important as long as we're trading near it, which we are. And we have a bunch of equal lows on the higher time frame there, but again, since we are at all-time highs, it's harder to be hard stuck short bias, even if it's just for the short term. Like we'll see a lot of times where we'll just sweep some minor sell side like this and then rip higher to all the buy side, and we won't have like that attack on sell side like we would expect to, as deep as we would expect it to. And then if we get real heavy, we have all of these down here. If you look in the top right hand corner, those are very smooth. But then we also have, like, this looks very smooth. There's like phantom trendline liquidity right here. So whenever you can kind of frame it both ways, it becomes harder. And by ICT's terms, low probability. Whenever you can frame it long and short, which I currently can do right now. So whenever I'm in a situation like that, I typically like to wait for the first 30 minutes and at least the first presented fair value gap. But remember, we got this BISI right here that took us up to the new day opening gap that's not marked right now, but we are holding that. And this is just the current range that we're in right now, right? It looks like a market maker sell model where we have original consolidation, move higher, now we break down, but we're just chilling right in the middle. So let me show you what that looks like. If we take a fib from this low up until this high, we mark the middle, we're right at the middle. So unless we're in a low resistance liquidity run and have a fair value gap over that middle, that midpoint, if we don't have something that's clean, like this fair value gap this isn't something I really trust because it's followed by this giant wick lower right here, and that becomes another barrier of, okay, we need to close below this midpoint right here, right? And so went up into that, hung around, and yeah, now we're hanging around midpoint right there. So that's why it's something that I'm not going to enter on right here, and it's pre-market. Midpoint. Might be able to hear my kitty in the background. Come here. All right, so it looks like we're making a run for those equal highs. And typically what the time frames I like to have on my little three charts right here is a 1 minute where I'm entering off of a 15 minute, and then I'll switch between like a 15 and an hourly on this chart right here depending on what I see in price action. Like right now I see this hourly and the bodies have held. Wicks have done, some serious damage, but the bodies have held. Um, and then currently trading in this 15 minute right here. Just took that buy side. So then I also keep my 15 second because I use this to see. I want to get like a behind the scenes look on if this is going to be like a turtle soup, and you could look for 2022 models on this 15 second time frame after a purge of like some 1 minute equal highs right there. And if you don't get that, then you're likely just going to get that continuous run right here. So okay, it looks like we closed above that. One thing I like is we have these relative equal highs and the midpoint of the opening range gap right there. And so within the first 30 minutes, you want to see, or you want to really tape read if, or enter, if we can reach that midpoint. And I like how it's aligned with the last civvy right here. That's resting above these relative equal highs. And this is a fair value gap right here, overlapping that 930. Sweep a sell side right here. That'd be like a short-term buy. So I'm going to watch that midpoint and how we hold that 930 price. So not able to get position on that just because I was talking about it. That's one of the downsides of streaming. I want to see if this is going to be an order block right here, because I like how it dug into that fair value gap, and the bodies are closing well above midpoint right there, which so far signals some strength. Let's see if we can get that run up into here. I can't take this though because it's not overlapping a quadrant level, but it is a valid trade. We also had this order block right here. Can take this off just because we've already dealt with that. Now I'm just watching this 15-second time frame, and again, I like this as an order block as well because if you take a look at the 15-second time frame, there's a lower time frame beneath the 1 minute. So if it's a 1 minute order block, you want to see a fair value gap in the lower time frame through the opening price of that, which we have right here. Took that minor buy side, watch for a touch of midpoint of the opening range gap. Into that fair value gap. So that was a good tape read right there. Unfortunate that I was talking about it and not able to actually get involved. Would have been a nice 1 to 1.6, but not a problem. We can just wait for the next run. We have buy side still up here, but we also have these kind of relative equal lows, but we may not need to hit those because this did the damage below here. And we may not need to hit this because this did the damage below here. And we're at all-time highs. But I'm not ruling it out. You could still see something. Whoops. But this is an important Civi just because it is right in alignment with that midpoint of the gap, and it's the last stage in a market maker buy model, the last fair value gap right here before we end up taking the highs, and we're very close to the new day opening gap. So um, we could get a move higher up into here and take that pre-market high, and then if we get real aggressive, take those equal highs right here. But we're too far up into the range right now for me to do anything, and there's no confirmation of longs or shorts. I gotta wait because we just took that buy side. And like, what am I gonna enter off of right here? All right, we could be making the high. This could be your initial Judas swing to go lower, or the question is if this was your initial Judas swing to go higher, and we're just gonna maintain extreme bullishness. Because if you take a look in the top right hand corner, trying to short that, I mean it's doable. Like I believe I've taken shorts this week at some point that have won, but it's just you have to be very mindful that it's lower probability and um, the likelihood of a high resistance run is likely, and not be looking for home runs, looking for those low hanging fruit targets. So if you can find a way to get positioned long at a nice discount, those are the ones where you want to have higher leverage and um, let it run a little bit more. Maybe instead of taking the full position off at like minor buy side right here, you only take one off and let the rest run and take partials along the way. So that's how I kind of approach uh, trades that are aligned with my higher time frame bias versus not aligned with my higher time frame bias. So I'm looking at this down close candle. It's overlapping that midpoint. And if we're in a bullish run, we want to see down close candles act as support on price, just like we did right here. But again, it's tough because we're in the civvy. So until we can get a close above midpoint, then we just continue to hold this. Hope you guys are doing well. Hope you learned something from the stream. Look at that right there. Bodies are holding that pretty nice. I have that marked because now we could be forming a market maker sell model where um, we just took minor buy side into a fair value gap, holding that midpoint right there. So we did the work of and it's 9:40. I forgot we had 9:45 a.m. news, or orange folder news. So this could have been that manipulation before that. This is your first sign of a bearish signature. It's not go in there and short it right now, but it's okay. Now we want to be keeping an eye on, can we continue holding and forming bearish PD arrays. And it looks like no. So we're getting some movement through here. Watching that midpoint. And if this is going to be inversion. When I say midpoint, I'm actually watching two midpoints. The midpoint of this fair value gap and the midpoint of the opening range gap. Equal highs right here. It's buying pretty high up into the range. I don't want to see that taken yet. Look for a full gap close. Nope. I had my finger over the trigger. If we would open this candle, come down and touch that, I would have entered long there, but not able to now. And just for reference, I have two screens. On my right screen, I have my Top Step accounts where I've got four linked, and that's where I enter my trades. I'm doing all my analysis on TradingView. So whenever I do enter a trade, if I do, I will be I'll move my Top Step chart over onto the chart or the screen that you can see, just so you can see the live trades being taken. Now we got relative equal highs right here. But again, it's in the upper half of the new day opening gap, so might be a little bit tougher to reach. If we do reach those, then we're looking for that full gap closure. Look how we closed right up at the midpoint of the new day opening gap right there. Took that buy side. So this was a nice little run right here too that you could journal, where we opened, we took pre-market high first, which made me not want to enter the trade, and we're in new day opening gap. Opened, took that, but then we went lower, held midpoint right here, and then a little 20, 30 handle run to that minor, to that minor buy side right there. And now we're looking to see if we can get that full gap closure, or if we're going to leave that because we did the damage to buy side. This was the trade though. I missed that just because I was talking about it. I like how this first presented fair value gap is overlapping that 930 price. We did damage, and this is what I mean. Like whenever we are trading in all-time high territory, you're not going to get that sweep of those obvious equal lows. And you also want to look at have your equal lows done any damage yet. Like this swept this, so it makes these a little bit less likely in all-time high territory. This 930 runs swept this, and so it may not hit this. I'm always switching between regular and electronic trading hours just to find different points of liquidity. Um, and yeah, see that overnight, or not overnight, see that regular trading hour liquidity from the previous day right here. See, these are all really, really smooth, but all right, we're seeing some movement lower now. 15-second looks pretty good. I'm gonna try one
Order
contract
filled.
on the 15-second. Very, very low risk, just because entering on the 15-second is something that I don't enter with my full risk on. But I like how this is overlapping that midpoint right there, so I'll move this over here. I need to get this out of here, that right there. This is not something that I'm fully confident on. I just, I mean, it's my model, but it's on the 15-second, and it's a very aggressive entry to try and look for a reversal. But it'll give me insight if it loses, so. And we're looking at this because it's overlapping the midpoint of the opening range gap. So already closing above midpoint right there is not ideal. We have this as an order block for last line of defense. But again, look, I'm risk. Yeah, so we closed above that. We are trading in this 1 minute inversion, which is our last hope. And it's overlapping the low of the new day opening gap. So I need to see us get real heavy here now. If not, then we likely go and take this high. Best case scenario would be down there. So I like how the body's held that, and it's also holding the low of the new day opening gap. Just need to see us continue to do that. But currently using the opening range gap midpoint as support, which is like right where my entry is. It's kind of why you saw how it went right down to my entry. It looks like it used it as support and went higher, is because my entry is literally at the midpoint of the opening range gap. The reason I'm going very low risk too is because I'm allowing myself the ability to be a part of a move that I think can occur. Like it follows my model. It's just I know through experience that it's an aggressive entry, and I'm allowing and giving myself the opportunity to pyramid whenever I get something on like the 1 minute time frame that um, is a little bit more convincing to me. If we close below the midpoint of this, then I'm very confident. So now I'm looking at this as a potential order block right here. I want to see us close below that. And it's overlapping the midpoint, and it's something that I can pyramid into because now I'm getting a little bit more confirmation. If we go and run this low without hitting this though, then I'm gonna have to cancel it. So I already kind of want to cancel it. Because if we hit this midpoint and then come all the way back up here, then it's a little bit riskier. Yeah, I think I'm gonna take that off. We have, where was that first presented? So on the micro, so I'm entering off of micros, but I chart off the mini. This was the first presented fair value gap right here, and it included a volume imbalance. On the micro, there's no volume imbalance, but the uh, on the mini there was, so I'm going to include it on the micro right here. I want to see this hold as I don't want to close back above this. I can move my stop above that order block right there. I also should be looking at this one too. We kind of have like a little gray pool area right here. So I guess closing above this one is fine. If we close above this one, then there is a little bit of trouble there. And this is a suspension block. And you know what? I do want to get another contract on. If it can go and hit that. If we go and take this low, then I gotta take that off. I like how the body closed below that midpoint right there. I'm not gonna get another one on. Damn, that sucks. Honestly, this could be used as an order block if we get a nice close below it. I want to have that on. We've already taken this low on the mini contract. And now we're seeing that follow through on the micro. So now we're in first presented fair value gap. I want to see it used as an inversion fair value gap. So I want to see us go through it and close. I'm going to move my stop to break even because we are hitting that 930 opening price. And I'm just going to target the initial though. Man, I want to get another contract on at this order block right here. But I just don't like how we're in first presented fair value gap now. Alright, I'm going to move my stop above that order block. And I want to get the midpoint of that initial wick. This is your 930 first candle, so midpoint right here is going to be very important. I could even just take it off right there, just to be very safe. And with one like if I had multiple contracts on, that would be a place where I partialed, so I may just take it off. Unless we get a quick run. Could even just trail my stop aggressively once we hit it. Also just hit that rejection block. Again, I wouldn't be this like aggressive in managing it if this was a long. It's just since we're shorting in an all-time high market, it makes me very, I can't think of the word, much more aggressive in managing my trade as opposed to letting it breathe. All right, run through that. Oh, it didn't get me.
Order
I'm just
filled.
gonna take it off. Yeah, because some shit like that can happen whenever we're at that initial wick. So if I take this to regular trading hours right here, this is an important wick. Look at that fucking reaction there. So that's a great job taking it off right there. Where did I take it off? Right here. And it could just go up into here because this is overlapping that first presented fair value gap and 930 price. So I would be watching this. But the fact that we just hit that midpoint and then we did it very aggressively and then an immediate move away, that just makes me not want to try and aim for that low, right? But I mean, we could still see it. I'm not saying we can't. It's just this low could be protected because one, it's the initial wick on 930, and two, it took this low. So even though we have equal lows right here, I would feel a whole lot better of them getting ran if one, we weren't at all-time highs, and two, it didn't this this type of move didn't happen where we had manipulation below that, so damage was already done here. It could do it, but I'm fine since I only have one contract, just taking it off before we actually see that. And I just got, if I was still in this trade, I'd be very um, anxious about my break even getting hit. So I feel confident with my decision to get out of there. But yeah, what did we have? We had a $50 initial risk using the 15-second time frame right here. We entered on this SIBI. Why did we enter on this SIBI? Because it's overlapping the midpoint of the opening range gap. And let me bring the other chart up on, um, just so it's easier to explain because I already have like all my markings there. So very nice market maker sell model here. Um, I entered on this 15-second SIBI. So what do we do? What did we do initially? Sell side first right at the open, right? And then we had this run higher. Called this move to buy side, but I didn't want to, or I didn't engage. I really should have because this is my model, but I was too busy talking about it and didn't have my top step up at the time where I should have entered. So look at the bodies and how they're holding that 930 price right there and the midpoint of the first presented fair value gap. So if we're going to see a move lower back to these equal lows, then I'd want to see it start to spool now. But we went up. This is the buy side of the curve in the market maker buy model, or of excuse me, of the market maker sell model, right? Buy side of the curve, we take buy side, take buy side. Made the high right around 950, right? Took these relative equal highs inside of the new day opening gap. We didn't need to fill the opening range gap, previous day settlement right here, because it's above that new day opening gap. So we can, but it's going to be a lot harder for price to find a way to be able to do it. What did the bodies tell us right here? Is that they couldn't even close above or at the midpoint of the new day opening gap, which if you look on the 15-minute time frame here, it's in purple. Okay, so the bodies are telling us that there is initial weakness, and I was calling this out as it was happening. I said, look at the bodies right there, but I don't want to, I want to start to look for signatures of lower prices. This would have been the most aggressive entry right here, and I believe I was talking about that, but then I that's just not something I'm going to enter off of. This was convincing enough displacement through the midpoint of the opening range gap. So I want my fair value gaps to be anchored to important levels like this. Um, we got that move higher, but it was just going into this inversion fair value gap. What is it overlapping? It's anchored to the low of the new day opening gap right here in purple. And the bodies held that, right? So if I move that, look at the bodies holding the low of that. That's a bearish signature. So we held the midpoint with the bodies and we held the low with the bodies. My fair value gaps are overlapping those levels, right? Oops. this movement up was okay, and that's why my stop was above here, because look at how these two up close candles, they were delivering into this SIBI, but also they hit the upper quadrant of the opening range gap. So it used that as pretty much perfect resistance, and then that had that huge displacement away. To me, that was the market tipping its hand that we were going to go lower. Moved higher, we were just going up into this order block right here on the 15-second, but then on the 1 minute, again, that inversion fair value gap and the low of the new day opening gap, and then we held and we began to break lower. I had the midpoints of these wicks right here, this one and this one. I said this was a gray pool area, so if ICT really has not talked much about this. I think he did like one lecture on the gray pool, so I don't think it's very known. But whenever you have some long wicks and obvious wicks, and these are swing wicks too, whenever you have something like that right near each other and you mark out the midpoints of those, this area in here is your gray pool, right? So you can even take that off, and you can see that did not go above it, hit the high right there, hit the upper quadrant right there, went lower. I was going to use this as an order block to get entered on. Why? Because look at the bodies and how they're respecting the lower quadrant of the opening range gap, which is these green Fibonacci levels, just grading that. And it went up into this SIBI in that gray pool area and went away. And so I couldn't get entered because like I wanted to see this candle, this one at 9:59, go up, hit that, get me in, and then go lower. But what it did was it took off without me, so could not get involved. And now I would not be so confident in this getting hit if I was still in this trade. My break even would be above this order block right here, and this would have to me, this would have to hold right here. But I already don't like how we're trading back above first presented fair value gap. So, pretty good day, very low risk. And what something I've been trying to do is, I mean, I've been trading very, very well. This is the month so far. Today's gonna conclude my trading for the current week. Um, but even last month was a good month for me, and the month before that obviously started out extremely rough. I've been trading these accounts for a very long time now. That was a losing month. That was a break-even month, and then August 27th, or I opened the accounts on August 26th, and began trading them there. And so far this year, pretty well. Winner, winner, nice winner last month. This month is on pace to be my best month. A lot of green days there, which is nice. And really, that just comes with knowing your model and knowing when to stop, right? See, like when I'm up on the week right here, I'm not continuing on a Thursday or Friday. I was up on the week right here, but it was literally like 190 bucks, and that's like, you know, I don't know. It's just I'm willing to go into the next day and risk that and potentially end break even on the week. Um, where was I going with this? One more day of 150 and up, and I am able to request my fifth or sixth payout on these accounts. I thought I was going to get called up to live because I've taken five payouts on my 150K, but four payouts on my 50Ks. Um, so yeah, maybe after this time I'll get called up to live. And oh, where I was going with this was I've been wanting to, and making a conscious effort of trying to increase my risk, because I have been seeing a lot of smooth and consistent success, but it's obviously not huge numbers, right? It's just, I mean, these are all less than $200 days, And before, when I started out with these accounts, I was doing larger days, right? Like 200, 300s, and that's across all the accounts. So it's like 1,200 bucks in a day. Um, but ever since the price action this year has been very choppy or just high resistance and a little bit harder to navigate, I lowered my risk, and as a result, I have been trading extremely well. So I'm kind of at like a standstill of, do I keep the risk lower, but I don't want to be in like a comfort zone. But at the same time, a comfort zone is very good in trading because it means you're confident in what you're doing. But at the same time, since I am trading so well, I want to start to kind of push my boundaries emotionally just a little bit, not too much to the point where I'm sweating and my heart rate is increasing in my trades, but to the point where I'm there's more risk on the trade, but I'm still not fully comfortable, but I'm able to manage it, right? On this trade right here, I literally risked 50 bucks. Like if you go back to where when I placed this trade and my stop was above here, it was one micro and it was like a $53 risk or something like that. And I made three times my risk. So if I'm risking 100, 200 bucks on a trade per account, all of a sudden, you know, the reward goes up substantially. But I'm just trying to preserve my emotions as much as I can. Um, so that's kind of a problem that I'm having with right now of deciding what to do about that. But yeah, I'm gonna call it here. I'm happy with the move. And yeah, if you watched up to this point, thank you for tuning in. If you found this helpful or you want to see more, give a like, leave a comment. Please subscribe. I feel like I've been grinding this YouTube channel for a long time and still pretty low on subscribers, like less than 400. But yeah, I'm gonna call it there. And thank you guys for watching, and we will see you in the next one.